In this video, I'm going to share with you a full walkthrough and technical breakdown of two similar trading opportunities that occur in two different type of ways. I also have a lot of lessons in store for you, including... Now, real quick before we hop in, one of the coolest things about trading is that it's a business that requires almost little to no startup in comparison to other businesses. Really, all you need is two things. You need an internet connection and you need a computer. If you're someone that was looking into building or buying a trading computer and you want some information on what you should be looking for, what all needs to be included, or if you're someone like me that just knows nothing about computers and wants to learn more, I've got a free giveaway for you. There's a link in the description box below to a free computer builders and buyers guide. Check it out. It's 100% free. It's very useful. I've personally used it twice when buying both of my machines and found it very helpful as someone who knows nothing about computers. So check it out, and I hope you guys enjoyed today's video. Pound dollar is one that stood out for me this morning, and I was hoping that some of you London traders caught it as well. So this is a perfect opportunity to walk through the I.P.D.E process. This is a perfect opportunity to look for a classic counter trend trading opportunity. So if you guys are new, there's a 4-step process that we teach that we recommend you guys follow called the I.P.D.E process. It gives you consistency in your analysis, and like I always say, consistent analysis, meaning you mark up the charts and look for the same things the same way each time, plus consistent execution, meaning you actually do the things that you're supposed to do when you get the signal, or don't do the things that you're not supposed to do when you don't get the signal, equals consistent results. So consistent analysis plus consistent execution equals consistent results. And an easy way to stay consistent is to have a process. So the I.P.D.E process starts with identify. I want to identify where is price action at, what is price action doing, what has price action done, all those magic questions. So this one should be pretty simple. Where is price action at? I like using the horizontal line. You also see I like the crosshairs. It makes me feel like the market sniper. But where is price action at, right? Look left, structure leaves clues. Price action has ran into a previous level of structure. If you guys remember, it's funny that Fitzy wrote this in. This was the same previous level of structure that we're looking at as for targets, right? For the previous trade, right? So it's, if you do consistent analysis, right? Staying on this theme of consistency, you never really get surprised with where the market is at. This was a level, if you guys remember, I don't know why I got to keep closing this thing. Sorry, there's stuff that's popping up. I hope I don't, not what, I'll just leave it up. If you remember a week ago, we were looking for a bullish trade, and we were looking for areas for profit for the bullish trade. And again, if you are doing analysis correct way, it makes life very easy because we're identifying a level of structure as that profit level for the bullish trade. That same level of structure could be the next entry for the potential bearish trade. So if you just keep doing your analysis consistently, it makes it a lot easier to identify those key levels. You're not just kind of hunting around for them. So price action has come to this level. You can see we've done two things, right? We had a little bit of a momentum slowdown. We went into a holiday weekend as well, so you got to keep that in mind. But then we had a big high momentum bullish candle that went up to that level and couldn't get past it. Today, we're putting in a smaller candle, and so far, that smaller candle is having the same fate, right? It has hit that same price point, and the sellers have reacted again. When we go down to a lower time frame, this is going to give us a different story, right? Well, same story, I should say. It's going to give us the same story. It's just going to look a little bit differently, right? It is going price action pushed up, giving us top number 1. Price action retraced. We pushed up again. Structure held again, giving us top number 2. Boom. Good example of your classic double top pattern. It will look similar, maybe a little bit clearer on a lower time frame as well. But good example of your classic double top pattern. Now, things that we'd like to team with the double top pattern are, 1, the RSI, or whatever indicator or oscillator is of your choosing. You can see that the RSI went overbought on the first initial test, massively overbought, right? So the little funny RSI thing that I have on my screen, it starts changing colors whenever price goes over the traditional, quote unquote, traditional overbought and oversold, which is 70 and 30. My personal preference for overbought and oversold, because I am an extremist, I like my drinks either really, really hot or really, really cold, anything in the middle, I spit it out and yell at the waiter to send it back and get me another. I have mine at 80 and 20. I don't actually do that, guys. I just ask them to add more ice, or can you heat up a little bit? That's the simpler. Well, why waste drinks? But I have mine at 80 or 20. You can see that price action, or RSI, has went extremely over that level. We went all the way to 90, almost 91, which is incredibly high. Now, let's look at it from this perspective. If you are a double top trader, we need this second test to do two things. One, it must at least, right, and this is all in the course if you haven't seen it already, it must at least test the highest close, and we cannot close above the highest high of that first touch. So when we look at these two candles, the green one, did that green candle give us a valid double top? The only green one in here. Everything else is red. Was this or wasn't not this a valid double top? This green candle? No, right? No, did not meet the rule. Was the very next candle a valid double top? The red one. Rouge. Vert rouge. Rojo. Yes, right? So that's our double top. So if you were to enter this, right, you would enter next bar market, assuming you enter on that bar. There's different ways to do it. You can wait for the a lower low, lower close, all different ways. But let's say you're doing it, quote unquote, the traditional way. You would enter right here. So that's your entry. Stops, if you're using an ATR stop, again, you want to find your ATR. So take that of the red candle, right? That would have closed at the time. ATR is 38. And then you would use whatever ATR multiple you like to use. If it's 1 times ATR, then you find the high of this entire double top, which is 134.21, 134.23, right? So 134.23 plus 38.51, right? That would be a 1 ATR stop. Obviously, if you're using 2 ATR stops or half ATR stop, you put it wherever that number, that multiple would be. So the stops are going to be pretty simple, in my opinion, because you have kind of a formula for that. What's going to be less simple is the target. The target is somewhat discretionary for most people. Now, you can certainly, when I first started trading double tops, my mentor made it simple. He was like, just take a Fibonacci out and always shoot for 382 or 618, right? You can make it as simple as that. You can make it an ATR multiple as well. You can do whatever you want. I don't really care. If you're discretionary and you're looking for levels of structure, where would you guys look for a potential target here? Kind of cheated because I already drew something in for you. Chris says 133 flat. Steal this line, 133 flat. Daniel says 618. Yeah, I'll show you what stood out for me. So initially what stood out for me is this inside level of structure right here. And I always do things in the same order, right? So I looked at this, I said, inside level of structure. Immediately that gives me a point, right? The kill zone, I guess you can say, is from here all the way to here, right? I'm conservative, so I tend to look for the beginning of the kill zone versus the end of the kill zone. But this is like the kill zone. This is the area in which the top of the kill zone is the first area in which I think price would go to. The bottom of the kill zone would be the last area that I think price would go to, right? So, but I always look for the first one. So I have that going on first. I would bring my Fibonacci in second because I'm a former CTS trader, so I always work through things in the same exact way. And I would see that 618 there, and I'd be like, little confirmation there. Okay, yeah, that's the voice I would use too, because I don't know, that's my trading voice. Little confirmation there, yeah, right? So I'm like, okay, more at that level. And then I would see what Chris brought up and said, okay, I like this level. What is this? What is this? What is this? 132.90. And I'd be like, wait a minute. 90 is close to 0.0. I would probably be a lot safer getting above 0.0 than being right below 0.0. So I would make that adjustment to get right above it, like 133.03, something like that. So that's the process of how I go from pretty much here to there, right? And that's just a little bit of safety. And then I want to measure it out. I want to say, okay, well, is this giving me a good risk reward? I can assume it will be, but you never know. Sometimes things get weird, and everyone has different risk reward limits as well. So for me, it's a 1-to-1. I have more than a 1-to-1. Boom. If you don't have more than 1-to-1, or if you require more than this, then you would have to wait or not take the trade. So that's the initial trade. I'm very jealous of you guys that were able to take it this morning, because I was not. It happened while I was asleep, unfortunately. But I do have a secondary chance. And real quick, before we get into the secondary chance, we go down to the hourly. We're going to have the same type of double top, right? Not as clean, but the same type of double top. Now, who can tell me what change would happen on the hourly? What change would happen on the hourly with this double top? It's not as pretty. I prefer it on the 4 hour, but I can certainly see you looking at it on the hourly. Yeah, your ATR. Our ATR was what, 32 on 32 I think on the 4 hour. Our ATR here on the hourly would be 16. So now, I say this and not saying you should force it, right? In my opinion, this is the hard part about discretionary trading, right? You take the trade on the time frame, one, that you're allowed to trade, but two, the time frame that it's most natural. I think the 4 hour is a lot more natural than the hourly. Maybe it's because I always go to the 4 hour first, so I see it and confirm it there before I go to the hourly, but just the pure structure of it. I can see you making the case for this double top. But this one has a lot more ebbs and flows. The V is not as clear as the 4 hour. So I prefer the 4 hour. So you don't want to force it, because sometimes you'll see traders do that, where I'll show you what I'm about to show you, and then they force it because it's going to look better. But two things change here on the hourly. One, your entry is a lot different, right? Our entry was here on the 4 hour because that's where the candle closed. On the hourly, this green guy right up here, that's our entry. Oh man, that's a lot higher, right? Two, so entry changes, which is one. Two, ATR changes. It was 32 before, was it 16, cut in half? So that was 23 plus 16 is 39. Yeah, 39. So that's going to take that stop loss and put it right here. Does anything change with our target? No, target stays the same, right? Same level, right? Man. So a 1.23 to 1 versus a 5 to 1, right? This is why I gave you all those warnings about make sure you view it on the natural time frame and don't get suckered into this, because it's really easy to see this and be like, man, Akil, I like it on the 4 hour, but that 5 to 1, ooh, right? This is why it's so hard to be a discretionary trader, but this is the discipline of being honest with yourself and not forcing trades. And again, it's not like you're not forcing it in a negative way, because it's still a valid trade, and everything is, it's a valid trade, it's a valid stop loss, it's a valid target. Everything is valid, which makes it harder. But you want to make sure that you're not taking it on this time frame just because it's quote unquote better. Make sure you view it the same way. And if you view the double top as, if you have the ability to trade the 4 hour and the hourly, which I do, and if you view it exactly the same on the hourly as you did the 4 hour, then feel free. I'm speaking to the person that sees on the 4 hour and it's like, yeah, that's a double top. Goes down to the hourly and like, not so much. But then sees this video, measures out the risk reward and be like, well, you know what, might change my mind, right? It's like, you get all these movies, right? I forgot there was this undercover movie like that, but like the movie where like, or you see these videos where it's like, there's a girl like walking down the street and then like a guy comes up and talks to her. He's dressed like all bummy and stuff like that. He tries to talk to her like, hey, I think you're beautiful. I wonder if I ask you out for a date. And she looks at him and she's like, no, like, look at you. Like, why would I go out with you? And then like he says, okay, well, I appreciate you giving me the time. I'm sorry it didn't work out. And then he goes and like opens up his like $1 million car. You guys ever see these? And then all of a sudden, like she looks back and she's like, oh, hey, you know what? About that date, right? He looks a little bit different now that he's standing in front of that, that Lamborghini versus just walking down in some sweatpants, right? Those things get me all the time. And he's like, no, and then drives off, right? I love it. But this is, Chris said that never happened. That happens to me all the time. If you ever see how I dress, I just wear a black t-shirt, sometimes a blue if I'm fancy. Trading Coach Podcasters, you get it. I wear a black t-shirt and some sweats. So I look like that all the time. And as I walk down the street randomly approaching women and they say no to me, and then I go to my Ferrari and they change their mind, and then I'd be like, no. And I speed off and it says Forex money on the back, right? And I throw Bitcoins at them. No, never happened. No, just me. Yeah, you guys haven't been trading enough. All right. Anyway, but yeah, this is that similar situation where you don't want to be like that. You want to stick to your guns. You don't want to be like the girl that judged the person and the Ferrari. Okay. Anyway, but those things are funny. If you ever get a chance, watch them. But you want to be natural and not force feed it. So the next question is, what do we do now, Akil? Because you didn't get a chance to enter the trade. Well, this is where you have secondary chances, right? This is where that 2618 comes in handy. We could look at this from either the hourly or the 1 hour, the hourly or the 4 hour. Again, Tuesday feels like a Monday. But either way you're looking at it, here's what we're looking for, right? And for you guys that went through the foundation course, remember that I told you there are 3 ways to trade, right? There are breakouts, there are pullbacks, there are reversals, right? So a double top would be a reversal, right? And I mentioned that no matter what you trade, double tops, head and shoulders, blah, 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 it's one of those 3. So what we're looking for here, and this goes back to our general principles, is we want to identify the V point of our double top, right? This is the lowest point, that V point. We know that this is important because this is a retest of structure. If this level of structure is violated, this goes back to our general principles. Break below, close below means we predict a continuation to the downside, right? So I say this because I don't want you guys getting caught up over the word 2618. Yes, the 2618 is a technique, it's a strategy, but it's just a general concept of a break and a pullback. And everything in trading is just a general concept. Even a head and shoulders is just a complex version of a general concept of something else, right? Everything falls under those 3 categories. So what you're looking for here is this. We have level there. We have same target, same destination, 133.03 is what I like here, right? My secondary chance is this. If, right, if then concept. If we can violate this level, then I would predict that price is likely to continue lower. If price is likely to continue lower, then my prediction is that price is likely to continue lower to that same level, right? So now the question is, how do I get involved? If you are a breakout trader, you can trade the breakout. All types of ways you can do that. I'm not personally a breakout trader, so what I'm looking for would be a pullback and then an opportunity to get involved. And you can do this as many times as possible, even if you're a a day trader. You can do this as many times as possible until you reach that location. So what I mean is this. Right? Whether it's on an hourly, a 15-minute chart, a range bar chart, if we keep breaking and violating, right, your profit's going to get sucked up a little bit, but you can keep looking for opportunities to trade. That's the wrong tool. Try that again. Here, right, anywhere until we reach here. Because once we reach here, the move has been made. Our expectation has been fulfilled, and we no longer want to get short at the floor. So again, this is a concept that swing traders can use, or if you're a day trader, you can look at the same thing. And we talked about, as a day trader, at least me, I like to look at my whole portfolio in the beginning, and then I like to dial down on the pairs of interest, right? And then I'll just watch those pairs. So this is something I would watch and be like, hey, if we break this level, I'm going to keep watching this. I would go down to a range bar chart. See if I can get a little quicker view. Range bar chart, same thing. Again, this is our shelf. This is our 3-3 even. You see these little ebbs and flows that happen on the range bar chart? Probably get a lot more of them down here than a minute chart. And I just watch these ebbs and flows and look for chances to get involved. And sometimes you get a chance. Sometimes you get multiple chances. Sometimes the market just goes pew, right? Straight down, you get no chances. But fantastic setup on different levels. There's some questions that came in. I want to get this into the chat real quick. And the pro trade log. So give me a second, get whatever questions you have in. All right, let's go to, before we take our break, let's go to euro dollar. This was a conversation we had on the chat this morning about euro dollar, and we had a question from a trader asking about a descending channel. But before we get into it, let's go I.P.D.E process. Again, what I like to do is, if you can't see, I draw a line out here. And I want to see where price action has come to. Are we in the middle of no man's land like it looks like? Or are we at structure? You look at this and you say, okay, well, those two lines are my closes and my highs. We've come into a previous level of structure, right? Little elephant candle right here, right? So we're not necessarily in a bullish trend continuation mode here. We have come into structure here. So we keep that in mind. Let's go down to a lower time frame on the 4-hour, and we see a few things happening, right? We see a recent breakout. We had this guy right here that broke out, well, kind of went sideways and it broke out to the upside. Now we're holding that level of structure and we're moving to the downside as well. Now the question was, on the 4-hour, do we have a descending channel? And we initially started off by saying, no, we did not. This morning, as we were talking about it, we're seeing this. Now, what does this look like to you? We have highs that are descending, but we have lows that are even. Who can tell me what type of formation this is? So again, high, high, low, 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 right? That is a descending triangle. Yep. So a descending triangle, which is, and this is a weird situation, right? Because on one hand, you have the flagpole before it, right? A flagpole before consolidation, which kind of makes it look like, I'll just use the emojis instead. We'll give 1 point for, kind of looks, there was a cow here instead of using the baby bull. Kind of looks bullish. But then we know that a descending triangle is a sign of what? Bullish or bearish, for you guys that know? Bearish. So now we have a stalemate. We have, okay, well, it looks bullish because of this flagpole that shoots up before this consolidation. But then it looks bearish because of the descending triangle. Well, who remembers what was happening on the higher time frame when we looked at location, or I.P.D.E? This is why this stuff's so important. Our general location, are we at a bullish location or a bearish location? Told you the I.P.D.E was important. I wasn't lying. Bearish location, right? We're at structure. So haha, 2 for the bears. The bear's so cute. Look at that. 2 for the bears. So again, this is why that I.P.D.E, that general analysis, the higher time frame, before we even look at the specifics. I know a lot of traders want to jump to the specifics, right? But before we even look at the specifics, we want to have a lay of the land, because it gives us these small clues that will help us either get into trades that are awesome or stay out of trades that are potentially bad. Now, we were talking about this being a descending channel, and I said it wasn't a descending channel because of those equal lows. And he asked, well, could it become a descending channel if it goes lower? And I'm like, yeah, sure. And this follows up on the conversation we had last week about morphing patterns, where if this goes lower like that, and all of a sudden now you got a descending channel, right? Potentially. Because you can look at this two ways. You can look at this as a descending channel, or this can just be the breakout of the descending triangle. And it made me think about something this morning where it was, I forgot what I put it on Blue Sky and Twitter, but it was like, sometimes as traders, we want to predict the future. But sometimes we get so caught up looking at what something might be that we ignore what it actually is. I don't know if that makes sense. But this situation made me think about that, because we don't want to, we get so caught up sometimes in thinking like, well, Akil, if this goes down, then this will be a descending channel, right? Which is true. Would you guys agree? Again, depending on, I'm not a trend line person, but depending on how you draw your trend lines. And if this goes down, this could be a descending channel. Looking at the future, which is good, because we need to look into the future as traders. But we don't want to be so blinded in the future that we ignore the fact that this is already a valid descending triangle. which is breaking out to the downside as we would expect. So we don't want to pass that up because this is a tradable opportunity. Versus a descending channel could be a bullish opportunity, but a future one. That also goes into the whole general concept going back to the higher time frame analysis. If we know we're at structure, and if you're someone that is not interested in getting long until we break structure, then the descending channel may even be pointless to you because you're not looking for a bullish move. So when you have that confirmation bias, that positive confirmation bias, you're locked into the side of the market that you want to be on. So before I get into the questions, how do we trade this? Well, you trade it the same way we looked at the 2618, right? If we can violate this level, that is a break and close below structure. If we break and close below structure, our prediction is that price is likely to go lower. So now the question is, okay, well, if price is likely to go lower, where are we likely to go lower to? This one gets a little bit difficult, but I want you guys to shoot me some ideas. If price is likely to go lower, where are we likely to go lower to? Because we want to see if this is just really cool analysis that we can tap ourselves on the back and be like, yeah, I identified it. Or if this is a tradable opportunity where we can make some, I haven't done this in a while, money, baby. I need to do that again. That was a long-going inside joke of the Trading Coach podcast, and I haven't done it in a while. So let's identify some levels here, right? I'm going to draw a level right here at the previous high. I'm going to go down to our next structure level, right? See the theme here? And I'm going to look at this level right here as well. These are going to be the important levels that stand out for me. So one, with this breakout, not only would I like to see a breakout between this, I'd love to see a breakout beyond this level as well. If we go lower, these two levels, 114.24, 114.11 stand out. We have this level a little bit lower at 113.95. We spoke about this earlier where we might as well be above 114 even. So let's just make that 114 even. Chris says 114.18 is a 50% retracement. Where are you dragging your fib from, Chris? There's a few levels we can drag them from. We have small, the Goldilocks and the three bears, right? We have small, medium, large, right? You can look from the small level like this. And obviously that's not going to give you too much because we're looking for a move down into this level. But you take the large move like this, from this swing low to this swing high, and I'll give you a 50% right there. That's probably the one Chris is looking at. Would you say 112.64? Yeah. Or you can take the medium level in here as well, like that. You get a 1618 right at that level, right above that level. We can bring volume in as well. You can see if there's any differences, excuse me, in the vol. And we can see that our highest volume level is actually right below the level we were shooting for. So maybe that allows you to even make an adjustment lower. Maybe that allows you to make an adjustment lower. Level I like is about 114.25, just because, again, I'm super conservative. That's the first sign of danger for me, 114.25. But if you're looking for a secondary target, I like 114 even, or again, if you want to go for it, 113.71.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on. This is